Okay, let's dive into something pretty fascinating from the airline industry. We're looking at a real head-scratcher from Lufthansa's latest financial report. And it's a classic business puzzle, right? When the money coming in the door is at an all-time high, why isn't the profit that's left over also breaking records? And that is the central question we're going to unpack here. I mean, the airline group just had an absolutely blockbuster summer, completely shattering its own revenue records. You'd think the champagne corks would be popping, but the bottom line, well, it tells a slightly different, more complicated story. So, what's really going on? And this slide just lays out the paradox perfectly. Look on the left, revenue hitting a record 11.2 billion euros. That's up 4%. Fantastic news. But then you look to the right, the net profit, what they actually get to keep, fell by 12% to 1 billion euros. So more money came in, but less of it actually stuck around. To figure out why, we've got to unpack both sides of this. So first, let's talk about the good news. How in the world did Lufthansa pull off the highest revenue in its entire history in just one quarter? Well, it all came down to a massive, massive summer travel boom. The sheer scale of what they did this summer is just incredible. The Lufthansa Group flew 42 million passengers in just 3 months. That is a staggering number of people putting their trust in this one airline group. And to really wrap your head around that number, this slide puts it in perspective. 42 million people, that's basically the entire population of California. Just imagine every single person in California hopping on a Lufthansa flight this summer. That's the kind of volume we're talking about here. It's huge. And, it wasn't just about flying more people. Their planes were also fuller than they've ever been. This number, 87.5%, is the load factor. It's a fancy way of saying that nearly 9 out of every 10 seats on their planes were sold. That is an almost record level of efficiency, and it's a massive, massive driver for that record revenue. But the story doesn't even stop with the ticket sales. This chart shows a big 13% jump in what's called ancillary revenue. This is all the extra stuff, like when you pay to choose your seat, or you upgrade to a nicer cabin, or use other digital services. It might seem like a small piece of the puzzle, but it is growing incredibly fast and giving that top line a really significant boost. Okay, so revenue is absolutely booming. We get it. Now, for the other side of the coin, if all that money is coming in, where is it all going? Let's take a look at the headwinds that are really squeezing those profits. The big takeaway here is that costs were just going up pretty much everywhere. I mean, the airline had to pay more for its staff, more for airport fees, they got hit by some really unfavorable currency exchange rates, and they faced a bigger tax bill because of some reforms. And on top of all of that, you've got this fierce competition on European routes, especially from budget airlines, which kind of puts a cap on how much you can charge. Now, before we go any further, let's quickly define a term you're going to see a lot in these financial reports: adjusted EBIT. Don't worry, it's pretty simple. Think of it as a health check on the company's main business. Flying planes and selling tickets, by stripping out all the noise from things like interest payments and taxes. It really just tells you how profitable the core operation is. And this is a really, really important piece of the puzzle, because while that final net profit number went down, the core operational profit, that adjusted EBIT, held steady at 1.3 billion euros. So what does that tell us? It tells us that despite all those cost pressures we just talked about, the fundamental business of the airline is actually performing really strongly. It shows they're managing the things they can control, and they're doing it well. Now, this kind of operational strength didn't just happen by accident. Nope. It's the result of a very deliberate strategy. So let's take a look at Lufthansa's playbook for how they're fighting back against all these financial pressures. This, right here, this little number, this is the hero of their turnaround story. They managed to keep the increase in their unit costs, not counting fuel, to just 0.5%. In an environment with high inflation, keeping your cost increases that close to zero is a massive, massive achievement. So how'd they do it? Well, their turnaround program really focused on these 3 pillars. First, strict discipline on all their spending. Second, they worked really hard to improve operational stability, so flights were more on time. And third, they rolled out all these smart efficiency measures, like using AI to optimize flight routes to save fuel, or digitizing maintenance checks to get planes back in the air faster. It's clever stuff. And all those efforts had a real, tangible impact. This program delivered 500 million euros in savings compared to the year before. That's 500 million euros that went directly to protecting their profits from all those rising costs we saw. But here's what's really smart about this whole thing. They're not just cutting costs for the short term, they're also investing heavily in the future. They're rolling out brand new premium cabins, they're improving their digital apps, and they're buying modern, fuel-efficient planes. And maybe most importantly, they've driven employee satisfaction to a new high. Because, let's be honest, a happy, motivated crew is one of the best ways to get happy, loyal customers. So, with record revenue, managed costs, and some really smart investments, what does the flight path ahead actually look like for Lufthansa? Let's take a balanced look at what's coming up. And this lays it out perfectly. It's a real tug of war. On one side, you have some clear opportunities. Those new premium cabins are a hit, there's a lot of room to grow in Asia, and their digital and maintenance businesses are expanding. But on the other side, the risks are very real. You've got supply chain delays for new planes, intense competition, some big labor negotiations coming up, and of course the ever-present threat of geopolitical instability, which can send fuel prices and the airline's biggest wildcard soaring. But even with all those risks, the company's leadership is projecting a lot of confidence. This quote from their report basically signals that they believe their strategy is working and that they expect the full year's earnings to be significantly better than the last. They feel like they see a clear path right through the turbulence. And that leaves us with the final big question. Lufthansa is trying to pull off a really difficult balancing act, keeping a tight lid on costs while at the same time spending money to make flying better for customers. It's a smart strategy, no doubt. But in an industry as volatile and competitive as this one, the question remains, is it going to be enough to navigate all the challenges and truly reach clear skies?